Hi, good afternoon. Good morning. Welcome, Adair. Hope you're doing well. Just going to go through all this data breaking the ECB interest rate meeting, the US inflation data, and we'll just make sense of it all. Hope you're doing well, Adair. I am well, thank you. I had to take my cat to the vet today because it was sick, but I think he's going to be okay now. So had a bit of unusual administration to do in my day. That's it. Yes, he's sat next to me now. He's pretty chilled, so he should be all right. All right then. I'll just run through a quick trade I took on that CPI. Just with those sellers there, trapping the buyers on the 15. Just took a move back to the standard deviation and sold it off. Just a few points, right? Just 2.5 points down to the VWAP. But just hey Ryan, good to see you.
Says the disinflationary process is over. Lagarde says the disinflationary process is over.
Just took that move from here with those sellers trapping those buyers there down to the VWAP.
Beneath the 129 mark.
Hey Ryan, just run through a quick scalp I took in the session on that CPI.
Lagarde says we are still in a good place.
And what we've got now is these buyers have now trapped these sellers here. So we're trying to go back to the upside based on this pushing above the value area high. So we've gone up, back down, tested, up to there, maybe a pullback and away we go.
The domestic economy is showing resilience.
We'll cover all that in a minute, but for now, let's just go through all this data dump we've had. So the first decision was the ECB interest rate decision. Now, what was interesting there is we've seen a slightly more dovish response on the meeting. Look how
reiterating they are not on a predetermined path.
Just going to turn the squawk off for now. Just notice how inflation has been revised lower. 2026 down to 1.7 from 1.9 expected. 2027 1.9 down from 2%. The core stays the same, but GDP growth is lower as well. And ECB Lagarde has said that the risks remain tilted to the downside, but risks to growth have become a bit more balanced. So that's a little bit positive in the press conference that's going on now. But bottom line, the ECB sees lower growth, lower inflation. So looking at the euro initially on that rate decision, we saw euro weakness and a bit of dollar strength. And if you look at short-term interest rate markets for the ECB, let's just see where it is now. Expected to be on hold. There's a 7% chance of a cut and slightly firmer expectations at present, but there's really not much in it. So the difficulty with this rate decision is the euro weakness was offset by the dollar immediately after with the CPI data and the initial jobless data. So the euro was weaker, but then when we saw the initial jobless claims look above market's maximum expectations, a relatively benign CPI print, slightly firmer, but not much. And then we got the jobless claims coming in above market expectations. The market's very sensitive. Hey Najem, the market's very sensitive to anything to do with weakening in the labour market for the US. And so now we see slightly higher chances of interest rate cuts from the Fed. Slightly, 50 basis point cuts up to 11% now from about 6% pre-release. So that's why we've seen this sort of choppy reaction, because the ECB is sending the euro one way and then the US data is selling the euro the other way via the dollar. So it's pretty choppy. In terms of big picture, we can see equity markets are sitting around all-time highs. We've got expectations of Fed interest rate cuts, Fed meeting next week. Volatility is pushing lower. Some of the sort of weakness on what's going on with Europe and Poland and NATO yesterday, markets have calmed a little bit. So equity markets are opening up higher. Bond market is finding buyers on the weak jobs market. That just confirms the prospects of Fed interest rate cuts. Gold and silver have been up and down with the dollar. Just as they've looked at the dollar's up, the dollar's down. We're trying to push down through this trend line here around at 97.80. So once again, dollar bears have the emphasis. Is there anything obvious to trade out here in the currency market? No, there isn't. If you look at currencies as a whole, you can see we've had dollar up, dollar down. We've had euro up, euro down before the data. So it's just a mixed kind of bag out there. A lot of uncertainty in currency markets, but broadly dollar weakness is resuming. So that's giving bonds a bid, that's lifting commodities, that's also supporting stocks on the prospects of interest rate cuts coming from the Fed. So that's where we're at. We have got quite a light budget data slate for the rest of the session. Bank of England speaker, and then we've got 30-year bond auction. Apart from that, I'll turn the squawk back on, but the ECB press conference still ongoing.
And Lagarde just underscoring that trade uncertainty has diminished.
Right. In terms of the ES, what we can see on the hourly chart, buyers coming in and they've trapped sellers underneath this level here. So we've got quite a lot of sellers trapped, but we are up at these daily all-time highs as well, right? So quite a tough little spot to be at. If you look at the 15-minute chart, you can see buyers have trapped sellers against this area, price trying to push above that value area high, and now testing this standard deviation. Now, I don't want to take this trade now ahead of the US Open, so I'm just going to wait, but that's an interesting spot. If we get back underneath this level, then it's looking to retest the value area low. Otherwise, staying above the standard deviation or the VWAP, we're looking to continue higher. Sort of this is kind of the outlook that I've got. So test the value area higher up to that R1. So we've had part one, part two. Now looking for dip buying. To put it more accurately, if you know, it's like exactly what, so I put that in earlier, it's like something like that, right? Or back underneath this level here, underneath the point of control, then we can start to look to test the value area low, and then underneath the value area low, moving lower. So at the moment, where are we opening? We're looking to open imbalanced with a bias to the upside. Now, that's the way I'm reading it at the moment. So buy bias is reasonable. Looking at the 5-minute chart, you can see buyers pushing above these sellers. That's an area we'd expect to find buyers if that's going to hold, right? Just above the value area and then pushing above these sellers. And that wouldn't be unreasonable to look for buyers, right, at that area. I don't want to take it now because I just want to wait for the open, but you might see buyers come in, push above those highs. The trade I did take, I'll just flip to my live account, was just pulling back to that area, a quick sell from the standard deviation down to the VWAP. Right, just a quick one there. We're just digesting all that CPI data and the ECB interest rate decision. CPI benign, but the jobs data was weak. That's the big picture, Carolyn. It came in, it was the initial jobless claims, and we know how sensitive the market is to poor jobless data. And you see initial jobless claims came in, look, 263,000 above the maximum expectations. So benign CPI, worrying jobs. So more chance of Fed interest rate cuts, up to 12%, 50 basis point cut from 6% to 12% after the meeting. That's just given equity markets a little bit of a pump higher, but which way it goes based on that data, it's hard to see. Look, we're up at these all-time highs, got R1 pivot point just capping price for now. We're opening imbalanced above the market's previous value area high. So we're trying to push higher. You can see here buyers pushed there. We looked at a little bounce off this standard deviation. We got a bounce off this first standard deviation. So if we see, sellers getting trapped against that first standard deviation, that was a suitable long. And if you look on the tick chart here, we saw some sellers here getting trapped there. That would have been a suitable long, but where are you going to go? 6558. So it wasn't a huge move anyway, right? But I'll be looking at that standard deviation at the open. We've got 46 seconds till the open. Buyers are still in control. Standard deviation, sellers trapped. We can go with buying. Okay, that's absolutely fine. Just going to make sure I've got the right account on. So 26 seconds on the 5-minute buyers, trapping sellers there. So then it's a pullback to here, 6554, look for sellers to get trapped and then going long. That'll be my playbook. Yeah, no worries, Cameron, at all. Good to see you. Good to have you, right? Glad you could make it. Okay, let's go. So we're there. We're at the open. And we're pulling down to the standard deviation.
And just announcement if the Czech Central Bank leaving the counter-cyclical capital buffer rate for banks at 1.25%.
Right, nothing to do here. I want to see something a bit cleaner. You got your little bounce off that standard deviation, but only up to the point of control that's developing. So we're sort of capped up there. And you just remember this is that weird R1 pivot point that we've got just above. Okay, waiting for buyers again here. Let's see if we get any buyers coming in. So I'm looking for buyers against this level. Okay, here we go. All right, go for buyers. If I get a close here, above. All right, that's it. I've taken a long, just those sellers trapped against this area. All right, add a second position just on that little drop down, see if it holds. Delta still positive. Okay, one position out, still got a second one in. Okay, second position out. Just going to wait from this. I wouldn't mind getting in from that first standard deviation, but I just need to see a bit more evidence. How to go with those buyers getting trapped, trapping those sellers, but price just continues to move lower. Okay, 15-minute close. Just watch to see if these sellers trap those buyers, then we can see a little bit more selling coming in here. Okay, 19 seconds to close.
So note the ECB press conference has now concluded, and just to summarise the press conference, it did lean net hawkish, with the Governing Council upgrading its view on risk surrounding the growth outlook, as trade uncertainty has been judged to have diminished. Lagarde also noted that inflation is consistent with its targets, and any temporary undershoots in inflation would not be enough to necessarily justify action. Lagarde added disinflation is over and policy is in a good place.
Okay, just jump back in on that. Enter another position on a pullback for the standard deviation. We've got those sellers trapped against that level. Delta is positive, so I'm expecting this to hold. The 15-minute, you can see these buyers are still here. 5-minute couldn't trap the buyers. The buyers are still alive. Just having that sell underneath the VWAP. Okay, now we're testing that VWAP. Now into that value area high. Sellers trying to trap buyers here. Buyers trying to step in on another attempt at a defense, but we'll see whether that lasts or not. You can see on the tick chart and just buyers trying to step in from this level. $15-minute close trying to come up. Buyers still holding all above this value area for now. Right, this is the battle really. If buyers can come in and trap these late sellers, then that's good. Otherwise, if the sellers come in and trap these buyers, then they look like we're going to touch the VWAP, maybe even lower. Let's see. Sellers trying to force the issue now. Okay, 10 seconds. This is important. Can these sellers push down through these buyers? Or do the buyers... Okay, so the buyers are still held it. So that's good for buyers. Go back up to that R1 pivot point. One minute, 31 seconds. I'm just going to take that off. Okay, so 5-minute buyers, if they trap these sellers here, then the upside's still on, and we're pulling away from the R1. So not unreasonable to keep looking for longs.